Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning. It's Tuesday, November 25th, London Open Prep. Here are the key themes shaping the start. Europe looks set for a softer open despite Wall Street's tech-led rebound, and energy politics are in focus as Russia and China discuss extending crude flows well into the next decade. Asia traded mixed overnight on renewed hopes for easier U.S. policy. But the real corporate story was a twist in the artificial intelligence hardware race. Reports that Meta may spend billions on Alphabet's custom chips put a bid under Google's parent, while pressuring NVIDIA and AMD, signaling investors are reconsidering who captures the next leg of AI compute demand. That helped tech sentiment, but the handoff to Europe looks tentative. On the macro side, the US dollar is mixed into a US data stretch. The dollar index has softened ahead of retail sales and producer prices, even as dollar franc holds near a multi-week high. A reminder that safe haven dynamics can diverge from the broader dollar tone. The yen retains a firmer bias on lingering intervention fears, while traders keep an eye on the Bank of Japan's next steps. In Europe, Euro-Pound is steady near 0.88 as markets await Wednesday's UK autumn budget, and Euro-Yen drifts as Germany's growth figures approach. Euro-Canada is holding gains on the view the European Central Bank may be done cutting rates. Energy and geopolitics are moving parts. Russia says it could extend oil export agreements that route crude to China through Kazakhstan to 2033, reinforcing a pivot of Russian barrels east as U.S. sanctions hit major producers Rosneft and Lukoil. That adds visibility to Chinese supply, even as Western trade channels remain constrained. Meanwhile, a report from Norway flags growing frustration with Europe's power market integration as prices bite. A sign of political pressure around the energy transition. Commodities are mixed. Gold is holding a bullish bias near a 1+ week high on rising rate cut bets, while silver is steady and oil is little changed as traders weigh Russian flows against sanctions headlines. Turning to markets and sectors, the AI chip subplot is notable for big-cap tech leadership and index tone. If investors believe hyperscalers will diversify compute suppliers, it broadens the field and could cool some of the single-name momentum that dominated earlier this year. In currencies, a softer dollar index into U.S. data is modestly supportive for risk, but the resilience of dollar franc hints at lingering caution. The yen story remains two-sided. Intervention chatter underpins it, yet uncertainty over the Bank of Japan keeps yen crosses like Aussie yen supported. Looking ahead, the calendar tightens. Germany's growth print is due to color the euro narrative. U.S. retail sales and producer prices will test those rate cut expectations, and the UK autumn budget lands tomorrow. It's otherwise a routine docket, so policy soundbites and corporate headlines could do more of the intraday work. What I'll be watching today: the Aussie dollar against the yen, looking for an uptrend to persist if risk appetite holds and the Bank of Japan stays cautious. Euro versus sterling. Likely range-bound until budget details emerge, but primed for a volatility pop on fiscal signals. Dollar versus franc, where any downside surprise in U.S. data could cap the recent climb. Dollar versus rupee, with scope for a drift lower if the central bank leans against currency weakness. And gold, watching for a clean break higher if momentum carries it through recent technical resistance, or a quick test of support if rate cut hopes fade. The takeaway, for now: sentiment is constructive, but measured, with rate hopes buoying tech and metals, while energy politics and policy calendars keep investors honest. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.